So good evening, everyone, and welcome to today's webinar. So we're thrilled to have you here, and hopefully we're going to dive into some exciting and exciting and insightful session on UK property investment. So just as we begin, I can introduce myself, Keith Egan. I'm Managing Director with Magnate Assets. And Magnate Assets, we specialize in guiding overseas investors to maximize the returns by helping them build a robust property portfolio across the UK, London, and the major cities in there. So whether you're new to property investment or expanding the portfolio, our goal is to provide education and tools and strategies that help you make informed decisions to succeed in the UK property market. Today, I'm joined by two esteemed experts in the field. So first we have Hiren Nada. Hiren is the CEO of Legacy Investment UK, and Hiren has over 12 years experience in Dubai and 15 years as a UK qualified financial advisor. Hiren has worked extensively with high net worth individuals and family offices to develop long-term profitable property investment strategies. And also joining us is Sophia Kazmi, Chief Director of the Madewell Group. Sophia is a mortgage advisor with over 7 years of experience, specializing in and securing tailored mortgage solutions for expats and overseas investors. She has a deep knowledge of the financial landscape, ensuring that her clients are always well positioned to secure the most competitive deals. So the idea behind the webinar today is to explain why the UK attracts a lot of investment. At the moment, I think there's in excess of £85 billion worth of UK property owned by overseas investors. So why do they invest in the UK? And secondly, some unique strategies that the UK has that many don't have in terms of leveraging bank finance. And we'll run through some examples, and we'll look at Manchester as one, as to how the numbers work out and how this is utilised by many investors to leverage and to get more of a return on investment from UK property. Now I'm going to hand over to Hiren, who's going to run through why the UK, and then followed by that, Sophia will give us some examples and some information around the mortgaging. Hiren.
Fantastic. Well, thank you very, very much, Keith, for the very kind introduction. I'd also like to thank you all for attending today. It's a pleasure to have so many people from so many different countries attending our webinar today. And I promise to deliver a very insightful presentation into why the UK is such a strong place for investments. So to get started, I'll just give you a brief overview of the agenda. We're going to talk about why should you invest into the UK, why Manchester, a little bit about who is Legacy and how we help our clients to build their property portfolios in the UK, an overview on mortgages by Sophia today, and then we'll talk about some current developments available, the processes of buying a property into the UK, and then we will open it up to some Q&A at the end for everyone as well. Please feel free to put any questions that you would like to ask into the chat box. And at the end of the presentation, Keith, Sophia, and I will be more than happy to answer all of your questions. So a little bit about myself, which Keith briefly did give you an overview. My name is Hiren Nada. I'm the Managing Director and CEO for Legacy UK Investment Consultancies. I've been based in Dubai now for over 12 years. I am actually a UK qualified financial advisor, and I've been advising clients on various forms of investments for over 15 years. I manage and look after clients in the Middle East and within the Africa regions. I work with a lot of individuals and family offices. As well as that, I'm specializing in helping my clients to build their property portfolios for their future and also for their legacy and succession planning. We do provide an exceptional turnkey investments and full service consultancy to international investors globally. So why should you invest in the UK? There's a lot going on around the world. We all know what's happening in the Middle East, but the UK is a very prime location for most international investors. And today I'm going to cover why exactly this is the case. First and foremost, the UK offers very attractive rental yields. This is because there is a high demand for rental properties in the UK from both professionals and students. In fact, rental yields in the UK are typically higher than in most other global cities. The UK property market has a long history of strong capital growth, and it has over 100 years of property prices in the UK have increased by an average of 5% per year. This is due to the number of factors, including the UK's strong economy, limited supply of land, and its global appeal. The UK has a strong and diversified economy, and this is quite a positive for property investors, as it means that there is a healthy demand for property from both businesses and also individuals. The UK also has excellent transport links to the rest of the UK as well as the rest of the world. And this makes it a convenient place to live and work, which further boasts demand for property. When you look at average UK property prices, and let's just look at the last 10 to 12 years alone, UK property prices always continually rise. And this gives you a very good example. If you'd bought UK property even in the last 12 years based on average UK property prices, then you would have made over £100,000 in just the last 10 to 12 years alone. Okay. And it shows you how stable the property market in the UK is. But when we then look more deeper into the UK, and if you look on here, this is from the UK Land Registry data, which is also available on UK government websites. This shows you since 1965, property prices in the UK typically tend to double in value every 10 to 15 years. Okay, and here's some examples of very crucial times. In 1990 to 1995, we had the Persian Gulf War crisis. Even then, when there was a global recession, UK property prices stagnated for about 5 years. They didn't drop, but they stagnated. And straight after that, 1995, property prices went up. In 2007, more recent, which we all remember, we had the Lehman Brothers global market crash and recession. Property prices took a very small dip, and that was mainly London that took the highest hit. But in 2010, UK property prices shot up. And furthermore, the UK was actually the fastest economy for property to recover out of a recession compared to any other country in the world. Then when you look at 2016, when the UK announced the Brexit, the referendum, they wanted to exit from the EU, a lot of people thought most Europeans are going to leave the UK and there's going to be a crash in the UK. Guess what? There was no crash. Nobody left the UK. In fact, the pound became stronger against the dollar and the euro, and property prices continued rising. And in 2020, we had COVID. And even then, UK property prices have continued rising and still today continue rising. And here, I'll show you exactly why UK property prices always keep on rising. If you look here, this is showing you the UK population since 1971. And this is showing you that UK population has literally tripled over the last 50 to 60 years. But when you look on the left-hand side at the map of the UK, it shows you that the UK is actually a very small country. And there's not enough land to keep on building and growing. And the population keeps rising. And that only means that property prices only keep on rising in the UK. It's all about supply and demand. When you look at gold, oil, and all of the commodities around the world, they only go up in value when it comes to demand. And this is what I look at UK property as. It's almost like an asset, a commodity that only keeps on going up in value because the demand is high. When you look at the 5-year forecast, according to JLL, Zoopla, and Savills, this is showing you typically house prices in the northwest region of the UK over the last 5 years grew by just under 25%. Manchester saw the highest growth of around 7.9%. But a lot of people, when they look at UK property, they talk about London. But the reality is, London has become very expensive, and the capital appreciation in London is not very high now compared to other major cities. And one of the questions I always ask my clients, if you had £1 million today, looking at that chart there, where would you invest your money? Where are you going to get the highest return on your investment? And everybody always says Manchester for the obvious reason. And that's what should apply when you're looking at investing into property in the UK. When you look at house price growth for the Northwest region over the next 5 years, typically you're looking at about 28.8% growth. So just under 30% growth on your property value if you buy now. And the rental market is just as strong at 21.9% in that region, according to JLL. So this is showing you some very strong investment case and reasons why investing into the UK property market is still a very strong, compelling reason for investment. Now, let's dive into a little bit more depth about Manchester and why Manchester is one of the most prime locations. Now, I'm hoping you guys will get sound. If not, forgive me. We did have a slight technical error, but here's a brief short video on Manchester, but mainly the numbers. A quick short video giving you a bit of an overview of the Manchester market, but I'm going to dive into it in a bit more detail now. With regards to the infrastructure, over the last 10 years, the UK government has funded or invested over £8.2 billion into Manchester itself. It does now have the third largest international airport, which flies to 255 destinations, 22 million passenger journeys each year, 1 billion expansion plan, which is completing at the end of this year, which also created 1,500 new jobs. But it's just like the London Underground, they have the overground or the Metrolink system in Manchester, which goes all over Manchester. 7 lines, 93 stops, and 40 million passenger journeys a year. So it's got a very well integrated public transport system in Manchester itself. In terms of the business growth, out of the FTSE 100 companies, so the top 100 companies in the UK, 85% of them are now based in Manchester. And since 2014, you've seen a 58% rise in businesses moving into Manchester. You'll be surprised to know that even things like the BBC, ITV, Sky, Amazon, they all moved out of London in the last 10 years and have now all moved towards Manchester because the overheads, businesses and everything, infrastructure is far cheaper than having your offices in London, where your overheads and cost of living is far more expensive. If you look on here, these are just some of the top 100 companies that are now based in Manchester. And I'm sure when you look there, many of these names, if not all these names, will be recognizable, but they're all now based in Manchester as well. But it's not just all about the companies, it's about the population growth. When you look, the Office of National Statistics, which is a government entity, they said that Manchester's population growth is double the national average. Furthermore, Manchester's population is projected to increase by 70,000 people by 2025, according to Manchester City Council. But according to Deloitte, they said that even at the current rate of construction, Manchester will have a shortfall of 50,000 homes by 2025. So guys, imagine this. You've got 70,000 people moving into Manchester in the next couple of years, but you're going to have a shortage of 50,000 homes. Now, basically, if you invest into Manchester, that can only mean two very positive things. That's going to mean great capital appreciation on your investment in property, and it's going to mean great rental yields on your investment as well. Okay. As well as population growth, it's also about the education sector in Manchester as well. There are 99,000 students attending the Greater Manchester's 4 universities. But also to mention, Manchester has now come into the top 5 universities into the UK. Also, a lot of international students are now going to Manchester as opposed to going to London, because parents are looking at London and saying, to send my child to London University is going to cost me £100,000 a year. But if I send him to Manchester, top universities there, or Birmingham, or Leeds, or Nottingham, it's going to cost them half of that on a yearly basis. So a lot of international parents are now looking at this as well and saying, let's send our children to Manchester. But one of the most important things to look at is that Manchester's graduate retention rate is now 70%, which means even the local students who are going to Manchester University, when they graduate, they're not going back to their home cities anymore. They're remaining within Manchester. And that is because out of the FTSE 100 companies, which I just showed you, 85% of them are there. And that means these students are now getting great job opportunities, earning good income, living in Manchester. Furthermore, there are 22 universities within a 1 hour drive of Manchester, and there are 383,000 students within a 1 hour drive of Manchester. So this is showing you that student population is very strong and big in the Manchester area as well. Job creation, Centres for Cities is a government entity. They rank every single city every year based on two very important factors, and that is job creation and population growth within a city. Manchester has been the #1 city for the last 8 years running. And then you see there, third place is Birmingham, which is the second largest city in the UK. And all the way at number 20 is now London. So you can see that from an investment point of view, population growth point of view, and job creation point of view, Manchester is the #1 thriving city at the moment. And this is just showing you the office spaces and also the growth in that particular area over the last 8 to 10 years. In terms of the rental growth, Manchester experienced a 12.2% increase in average annual rental growth in 2023, reflecting a very strong demand for rental properties. Average rents, one bed rent for £1,250, two bedrooms for £1,700, and three bedrooms average rent for £2,400 per month. Prime rental growth in Manchester was higher at 18% annually, driven by the premium segment of the rental market. So that means all the new build properties with all these new amenities that are coming in, that is what we call prime rental growth, prime rental properties. They're the ones that are achieving even higher rental demand. In terms of the economical growth within the area, average GVA, which is the gross value added, 67% since 2000. Oops, sorry. And what this is showing you very comfortably that even since 2000, all the way up to 2035 even, Manchester's economy is going to continue rising as a big powerhouse in the northern region and the northern sector, showing you good growth potential on your investments in Manchester. Furthermore, here on the right-hand side, you can see the light grey and the dark grey. The light grey and the dark grey is the greater Manchester area. But the dark grey area, where is Salford, Trafford, and Manchester City Centre, that is the prime locations at the moment where we focus all of our developments in Manchester, because this is where we are seeing the highest capital appreciation and the best rental yield on your investment. So in the greater Manchester area, it's a population of just under 3 million people. There are 550,000 people that live in the Manchester, the dark grey area. It's the main driver of the northern economy, and it creates 1.5 million jobs in the dark grey area alone at the moment. And that is where we have focused all of our major prime developments in. When you look at the 5-year forecast at the moment, this is showing you that on the house price forecast, 19.3% and above between 2024 and 2028. And that is an average over the greater Manchester area, not just the internal prime areas where we focus. If you look at the rental forecast in the greater Manchester area between over the next 4 years to come, you're looking at 21.7% growth. So this is showing you very strong statistics as to why Manchester is the one main area for growth on your investments. Okay. So now I've told you a little bit about why you should invest into the UK. I would like to explain very briefly as to why you should work with us at Legacy. So I'm going to give you a quick brief overview. As a company, we have 3 different divisions. We have the UK division, we do citizenship and residency, and we have our Dubai real estate division as well. We are fully licensed and regulated in Dubai, and we also have over 10 years experience in the UK real estate division as well. As well as that, we are a global company. We have clients all over the world. Africa and Middle East are our 2 biggest markets, but we have a lot of clients within the Far East and the European area as well. Our head office is based here in Dubai. And then we also have an office in Turkey, the UK, and in Spain as well. We have over 10 years of industry experience offering clients great opportunities into investing into UK real estate. From here, we've got over 10 years experience. We offer investors can benefit from high rental yields and significant capital appreciation from their investments, working directly with leading property developers to offer a portfolio of luxury city centre properties. We're renowned for our reliable services across the Middle East, Africa, and the Far East regions, and we thoroughly vet opportunities and prioritize our clients, earning us a very loyal investor base. We offer a wide range of opportunities to help clients enter the UK property market and build a lasting property portfolios located in prime areas of leading UK cities, including London, Manchester, Birmingham, Liverpool, and many other cities where our clients can benefit from high capital appreciation and high rental yields. As a company, we do a very strict due diligence process on any developers we choose to work with. First and foremost, we evaluate developer track records and company structure to ensure that the developers we work with have a minimum of 10 years track record. They're built, completed, and handed over thousands of apartments in the UK, and they're not first-time builders. From there, we will conduct site inspections, pricing analysis, and market research to ensure that the developers we're choosing to work with are in very prime locations where our clients can benefit. We will then ensure mortgage options are available for all of the locations and sites that we choose so that our clients can benefit from high loan-to-value opportunities. We will then review the rental markets, yield forecasts, and service charge budget to ensure that the projects that we're working on and the units that we have available are viable for our clients to be able to make good rental income and yields. And finally, we create marketing assets to effectively promote the developments that we are working on. So as you can see from this, from start to finish, we do a very strong due diligence process before choosing to work with any developer in the UK. As a company, we do offer a full turnkey solution. We don't just sell you a property, we will handhold you through the whole process of buying a property in the UK. First and foremost, after this webinar, those that are looking to buy, we would then do an investment consultation. It's a one-to-one meeting where we find the right city, the right location, and the right units that all fit within your budget, what you want to buy into the UK. From there, we will introduce you to an independent panel of lawyers in the UK. These lawyers do not work for us. They do not work for the developer. They will work with you. And because the UK is such a heavily regulated market, you do not make any payments to us or the developer. You are making the payment directly to the lawyers in the UK when you do your exchange of contracts. And they will go through all of your documentations with you, but also they will also do things like the KYC, know your client, AML, anti-money laundering checks, and source of wealth. Where did your money come from to be able to buy a property in the UK? When everything is satisfied, you will pay the lawyers directly into an escrow account, so your money is completely safe and protected in the UK. From there, 6 months before completion, we will introduce you to UK-based regulated mortgage lenders. From there, we will help you with the full property management services. For 3 months before completion, we will help to get the property tenanted, manage it, and maintain it. As an international buyer, you don't want the headache on a daily basis dealing with your clients or tenants in the UK. We will offer you the full property management services from start to finish. We will help you to open up a UK bank account if you don't already have one. We will help you with FX services. So if you wanted to convert your currency, your local currency you're earning into pounds, dollars, or euros, we work with regulated FX companies in the UK that will help you to do it at better rates than the banks. We will also help you with company formation and setup. Some people that are buying multiple properties from us, there are tax benefits by putting the property into a UK-based company that you are the director of, and your wife and children can become shareholders, dividend holders, etc. And finally, we help with investor and golden visa services in the UAE as well. So as you can see from this, we will handhold you through the whole process of buying a property in the UK. Now, many of my clients say, Hiran, it's great, we bought a property from you, but how are we going to make money from our property? So I'm going to give you a very quick overview of the property management. Legacy works with leading property management companies in the key regions in the UK. These companies provide a comprehensive lettings and management service which allows you to enjoy all the benefits of being a landlord, but with none of the headache. By using Legacy, you can generate income from your home, which is what we call a true turnkey investment. The kind of services that property management companies will do, they will do the full marketing and letting service, but you don't pay for anything until a tenant has moved into your apartment. They will do the full tenant referencing, checking services to ensure that the tenant that's moving into your apartment has got a good track record. They've got a good credit history and a profile before they move into your apartment. They will also do the snagging and key handovers, which means if you don't want to fly into the UK to pick up your keys, they will do the full inspection of your apartment. Then they'll send you images, pictures, and videos showing you that your apartment is perfect and ready for a tenant to move in. They will do inspections throughout the tenancy to ensure that the tenant is looking after the apartment. And then they'll also do inventory checks before the tenant moves in and after the tenant moves out. If there's any damage to your property, it gets taken out of the security deposit of the tenant, and then the balance is returned back to the tenant. And then your apartment is perfect and brand new, ready for the next tenant to move in. And they'll also assist you with non-resident landlord tax. So as you can see from this, the property management services are there to cater for international investors and not have any of the headache of buying a property in the UK. Now, based on that, I would like to hand you over to Sophia, who will briefly talk to you about mortgage options in the UK and how does it work.
Super. Thank you very much, Hiran, and thank you everyone for joining us this evening. So now that Hiran has spoken a little bit about the UK market, we're just going to go into a little bit more detail about mortgage offerings for yourselves, whether you're overseas buyers or living in the UK, what those might look like, and the different types of mortgage structures available to you as well. So just a little bit about myself firstly. So I'm the director of Madewell Group, and we are an international mortgage brokerage headquartered in Dubai. And we essentially work with clients all across the globe in securing real estate finance for predominantly UK properties. Now, I've been based in the region for the last over 6 years now, focusing on expats, foreign nationals, high net worth and ultra high net worth clients in the region, and assisting them in working with lenders all across the globe in finding a bespoke solution that meets their requirements and essentially handhold their process from application all the way through to successful completion. In terms of how we're going to start off is we're firstly just going to look at the different types of mortgage options available in the UK, the different types of structures, and then we're going to go into a little bit more detail about us as a company, how we will work together with you in order to obtain that mortgage successfully and smoothly. So firstly, just looking at the benefits of a mortgage, because often we have clients who come to us and either firstly aren't aware that they can get a mortgage as an overseas borrower, and secondly, sometimes we have clients who come to us and want to initially purchase in cash, but we often have those conversations around the benefits of a mortgage and particularly around leveraging and how one can then look at growing a property portfolio in the UK. So quite simply, just starting off with a simple example based on a property price of £200,000. Let's assume one purchases that property in cash and holds on to it for 10 years. In 10 years, let's say you sold that property for £300,000. Your investment 10 years prior was £200,000. Your profit then equates to £100,000, which is also the equivalent of a 50% profit. Now, if we use that same example with the same property, but alternatively, we then looked at obtaining a mortgage to acquire that same property. Let's say you put down a £50,000 deposit and you took out a 75% loan to value mortgage, so you borrowed £150,000. Again, 10 years later, you sold that same property for £300,000. Your investment to purchase that same property in the first example was £50,000. Your profit still equates to the same amount. However, the percentage, that's now a 200% profit. And where you really see the benefit is then when you look at leveraging and growing a property portfolio. So using that same example in the first line at £200,000, that same investor, as opposed to putting that into one property, could look at spreading that over 4 different properties in 4 different locations, all generating a passive income, generating your rental yield that will look after that mortgage. You can then total your property portfolio value of £800,000 with that £200,000 deposit. Again, sell each of those properties hypothetically 10 years later for £300,000 each. Now your investment is £200,000. That equates to then a £400,000 profit, which is equivalent to a 200% profit. And that's where you really see the benefit of leveraging. And that's how typically, if you've ever heard the term in the UK before, that's how landlords then become portfolio landlords, and they grow their property portfolios, they leverage, they potentially look at releasing equity later on down the line, and then reinvesting that equity into further assets. Which leads me very nicely onto my next example, which is the different types of mortgage options available in the UK. So The UK offers quite a unique solution, which is quite unique to the UK and only a few countries around the world, which is known as an interest-only mortgage. I'll touch on firstly what a capital payment mortgage is, because it's a traditional mortgage, probably one that many of you are familiar with. It's essentially a mortgage whereby, let's say you borrow £150,000, you took out a 25-year mortgage, 25 years later, you've repaid the mortgage in full. Let's assume in this example, your mortgage repayments are £929 a month and the rent is £916 a month. Your loan at the end of the mortgage is zero. It would have been fully repaid. Your equity in the property is £500,000 and the value is £500,000. Now, using that same property, however, now going for an interest-only mortgage. An interest-only mortgage is quite simply a mortgage where you pay just the interest on the loan amount. So you're not actually reducing the loan balance, you're just paying the loan amount. That means at the end of 25 years, you will still need to repay back the lender the initial loan amount that you have borrowed. Now, again, your monthly repayments are £700 a month. Your rent is still £916 a month. Now, both of these examples have been based on the same interest rate, and this just shows you how your monthly repayments differ. £929 a month on a capital payment mortgage versus £700 on an interest-only mortgage. So firstly, from a cash flow perspective, you're far more liquid. It then enables you as an investor to grow your property portfolio and spread the equity, because the argument is, if it's an investment property, then why are you putting all your equity into one asset when you can then potentially look at diversifying and spread that over 2, 3, 4 properties, as we saw in the first example. Later on, 25 years later, let's say you hold on to that property, the value of the property is still £500,000 and you have £350,000 equity in the property, which you can then look at releasing. You can then look at capital raising, taking out some of the equity that has grown in that property, releasing it, and then putting it into another investment. And that's the beauty of the buy-to-let and investment market and the UK mortgage market. It's a very unique offering that the UK offers. And it's a very common structure that investors, typically buy-to-let investors, will go for. Just going on to a little bit about our service now. So we touched on, as I mentioned, we're an international mortgage brokerage headquartered in Dubai. We pride ourselves on offering the best mortgage service. And what that essentially means is, in short, is we offer a bespoke solution to all of our clients. All of our clients are international, they're based all across the globe. And with that, we work with over 750 lenders globally in order to find a solution that's right for them. Whether you are buying your first buy-to-let property, you're a first investor, or whether you're looking at growing a property portfolio. We also work with lenders who have an appetite for a lot of high net worth and ultra high net worth clients, because typically some clients might not have a very vanilla income structure. So in that sense, we need to work with lenders that can look at that individual circumstances, look at their profile, look at their net worth, their assets, liabilities, and then from there they can take an approach and offer a suitable mortgage. Outside of typical purchasing financing, we often arrange mortgages for remortgaging. So that's typically, a lot of clients may have expired, gone on to a standard variable rate potentially, so their rate would have expired, at which point they may want to remortgage and look for a more competitive rate. We have a lot of clients at the moment who are reverting onto standard variable rates in the market, so potentially they locked in rates 5 years ago when rates were slightly lower, and now they're coming on to standard variable rates. Now, standard variable rates are higher than rates now in the market, especially recently when interest rates have started to come down again. We're seeing a lot of lenders now start to reduce their rates and offer more competitive rates. So with that, we've had a lot of clients recently who are now looking at remortgaging and going on to some more competitive products again. With that, when one remortgages, you can also look at capital raising, which is what we mentioned in the previous example, when you look at taking out some of the equity that's grown in that property and then reinvest that. And then outside of property, we can arrange slightly more specialist financing like bridging finance, commercial finance, and luxury asset financing as well. Our team across the UK and the UAE have over 100 years worth of combined financial services experience. And with that, we have arranged financing across the globe. This diagram just really demonstrates where in the last 12 months we have arranged financing. But I must highlight the UK does remain where we arrange, I'd say, 90% of the mortgages. And that's for the reasons that Hiran touched on earlier. It's the attractive economy that the UK boasts, it's the safety, it's the stability of the currency, and it's that growth, that historic growth that the UK has demonstrated every few years, year on year. In terms of the process, so purchasing a property can, of course, be one of the most stressful things that one does. So we ensure that not only do we assist you in arranging the mortgage, but we can assist with all of the ancillary services and supporting services that come with that. So as Hiran touched on, we assist clients with opening UK bank accounts. Now, it's important to highlight that you don't necessarily have to be in the UK, nor do you have to travel to the UK. I talked about this process. This can all be done remotely. We also work with clients if they want to obtain legal advice and tax advice, and then from there they may be advised that purchasing the property, particularly if they're looking at doing it in a portfolio, doing it through a UK limited company might be the best structure, so we can look with that. And outside of that, we can assist with arranging insurance and FX transfers as well, just so the process is as seamless, as stress-free as possible, but also that it's done in the most efficient and cost-effective manner. And finally, I think it's really important to note that we work with you as a team to ensure the process is as seamless as possible. We are a whole of market brokerage, but our role is to work with you and represent you and then present that application in a way that we know is going to be approved when we submit it to the lender. So typically how it works is when a client is introduced to us, we will get in touch within a space of 2 hours to conduct a thorough fact-find call. Once we've carried out the fact-find call, we will then go away and research the options and come back to you with a set of indicative terms within a space of 48 hours. And those indicative terms really illustrate the mortgage that we recommend to you, what that looks like, the structure, and overall how that investment is going to work for you. When we're then in a position to start the mortgage application, which we normally recommend starting about 5 months in advance of the property handing over, we will then start collating all the supporting documentation. Now that process from application all the way through to completion takes anywhere between 6 to 8 weeks. Now it's on a case-by-case basis. It depends on the lender we're using. It depends on how quick you are in obtaining your documents. We normally say give it as much time as possible. And we will also preempt you prior to anyway submitting the application, even if it's a year in advance, just with what documentation you need to start preparing. So that is going to be as smooth as possible. Throughout that process, you will have a dedicated broker at Madewell Group. All of our team are fully qualified, and we pride ourselves on being available around the clock 7 days a week. And that's because, as I mentioned, our clients are based globally. We have clients across the Middle East, Africa, Europe, and in the US, all with different time zones, sometimes also with different working days. So our team are available to work around you. And in the markets and that we're experiencing at the moment, where interest rates are changing, where new banks are coming to the market every week and changing their criteria and reducing their products and introducing new products, it's important that you're working with someone that is going to meet those deadlines, secure that mortgage application, and importantly, secure that product in a timely manner. And just to go into a little bit more detail about the process and how it works, because for many of you, it might be your first time taking out a mortgage in the UK. So just to go into a little bit more in depth. So initially, when you are introduced to us, we will carry out a fact-find call. Now, the fact-find call is where we gather, it's about a 1-hour call. It's where we gather the information around your income, your expenditure, details of any assets or liabilities that you have in the background, particularly any other properties that you have. And finally, we go into the different types of mortgage structures and different mortgages available in the UK. And what are you looking for? What are your goals, so we can go away and find you the most competitive solution and the solution that's right for you. We will then present you with those indicative terms from the lender. If you are happy to proceed with submitting an application, we will then send you a copy of our client agreement. Now for that, we just need a copy of your passport and proof of address, and we will send you a copy of our client agreement. At that point, we will start collating all the supporting documentation to prepare the application to be submitted to the underwriters. Now, if the property isn't yet completing, let's say we are even a year in advance the property handing over, we will still provide you with the indicative terms. We will still provide you with the documents that you know in a year in advance what documentation you need to start preparing. And this is particularly important for clients who, let's say, don't have the right documentation, or maybe you're self-employed. Not all banks, as an example, will require you to have audited accounts, but we may say, look, if you're able to provide audited accounts, this will be the option. However, if you're not, then this will be the option. So we can give you 2 different options, but it just enables you to have those options available at the time when we come to starting a mortgage application. So we will let you know what those documents are in advance, so you can start getting those ready. Once we submit those documents to the lender, we will obtain a decision in principle, and that is the initial illustration from the lender prior to them carrying out their full assessment, but this is just their initial feedback once they've carried out their headline research into what they're willing to offer. At that point, we will then submit a full application to the lender. The application then goes through to the underwriters for a full credit approval. Once the case is approved, it is often subject to evaluation. So that's when the lender will instruct a surveyor to go in and view the property. They will carry out both a sales and a rental valuation on the property. And that is the final step before your formal mortgage offer is issued. And that's typically valid for anywhere between 3 to 6 months. Once your mortgage offer is issued, your lawyers will then be in touch with the bank's lawyers in order to work towards completion and set a completion date for drawdown, at which point you then legally own the property. So that's really the process from application, from instruction all the way through to completion. As I mentioned, it is a bespoke offering. Every case is unique, and then as a result, all the documents will be very different. But if anyone wants to have a chat and have an initial discussion and start exploring your mortgage options, always happy to do so. And these are my contact details on the final step. But I'll pass back over to Hiran, who's just going to go into some further detail about the new projects available.
Fantastic. Thank you very much for that, Sophia, and for the detailed explanation on mortgages. Please, guys, do feel free to contact Sophia if you do have any questions regarding mortgages, or let us know, and we can take it from there. So now we've spoken about all the options, what we have. I think this is the more exciting bit where people want to know what have we got available and what can we buy into. So let me just give you an overview on the Manchester developments that we currently have available. So this is giving you an idea of the Manchester and the Salford and Trafford and the city centre area, which I briefly explained to you earlier. This will give you here a bit of an idea of all the major locations. So you've got the University of Manchester, the Piccadilly and the Victoria line that go directly into London and other places. You've got Manchester City Football Club on the right-hand side. You've got the University of Salford on there. Then you've got the Media City area, which is where the BBC, ITV and Warner Brothers and many of the multinational businesses are based. And finally, at the bottom left, we've got Manchester United Football Club. So all of these are very, very prime locations. Whichever direction you go from, these are all 12 to 15 minutes drive or tram into the city centre of Manchester. So very hot prime locations. These here are showing you the developments that we have had in the last 12 to 18 months that are now completely sold out. And these are the developments that we currently have. There are 5 developments that we have within Manchester that we're going to showcase to you today. I'm not going to show you all 5. I'm going to show you our top 2 developments today. I'm going to start by talking to you about Berkeley Square, which was launched a few months ago, which has done extremely well for international buyers and clients. I'm going to start by showing you a very quick, brief video on Berkeley Square to show you the quality of finishing. That was Berkeley Square. That's in a very prime location in Manchester. Just giving you an idea of what the outside and the side view of it looks like. But to go into a bit more detail about it, basically, this has got a total of 250 units on the west wing that we currently are offering. It's got a mixture of 1 and 2 bedroom apartments, completing in Q4 of 2026. An estimated rental yield of about over 7% because you're buying off plan and below market price. Starting price for the 1 bedrooms are £235,000, 2 bedrooms are £346,000. So very well priced for the location that it's in, but also with the high quality of finishing and amenities. Talking of amenities, to give you a bit of an idea, this comes with pretty much everything that the new developments in the UK now come with. It's got river views, five-star hotel style concierge, co-working spaces, rooftop gardens. It's got a residence gym, yoga rooms, landscape gardens, courtyard, central space, and a secure bicycle storage area as well. Outskirts of city centre, but literally 7 minutes away from Media City. So it's going to be perfect for the executives and working professionals that are in Media City. And again, just confirming that it's completing in Q4 of 2026. Very highly respected and reputable developer in the UK. We've been working with them for over 7-8 years now, and they've always delivered on time and very high quality developments as well. To give you an idea how it works, it's £5,000 to secure a unit now. And if you went for a 1 bedroom option, it's 20% down payment now after 28 days, and you paid up to the lawyers directly. And then the balance is on completion. And typically, as Sophia mentioned, we can get 70 to 75% loan to value mortgages for most of our clients, depending on where you're based and located. And those that want to go for a 2 bedroom option, we have a very attractive payment plan, and the 2 bedrooms have been extremely popular. £5,000 to reserve a unit. You only pay 10% after 28 days to the lawyers in the UK. Then literally 6 months later, you pay a second deposit of 10%. So you're spreading your payment nicely over the next 6 months and not outlaying a huge amount in one go. And then on completion, we will get you the 70 to 75% loan to value mortgages. And like I mentioned, 2 bedroom option has been very popular with our international clients. And on a 5-year return on investment, I'll skim through this quite quickly with you, but just giving you a high-level overview. You buy the property at £225,000, deposit you pay in total by completion, you borrow £156,000, you pay your stamp duty, then you pay your rental income at give or take 7 to 8% rental yields. Expenses, you take out the property management fees and you take out your service charges, ground rent is 0. Then your annual net rental income is this. And then when you look down here, when you take out the net income of the next 5 years, and then you look at your capital appreciation as well, you're looking at a total, when you look at your rental income plus your capital appreciation, in 5 years, you would have made 101,746. To summarize that, total investment, £80,000, net rental income, 15, over 5 years, 38,000, which is your net, which is after all your expenses and everything, and you get your 5-year capital appreciation. You're looking at total 5-year return on investment of £127,000, 127% on your investment. So I'm sure you'll agree this is very, very attractive returns. That is with a mortgage. If you did the same scenario with cash, same principles, you'll get the same rental income, same property value and price, but you're looking at 59.5%. And there you go. This is giving you a total return of 59.5% because you've paid all the cash upfront, buying the property on cash. So again, this just reiterates what Sophia was saying, that the power of leveraging and gearing and using the mortgage options that are available in the UK will actually give you a much higher return on your investment compared to paying cash for a property. Now, let me show you our second development we've got in Manchester called One Victoria. This is in a very prime location, right in the city centre of Manchester, right next to the Victoria train station that goes into London Central also. Hence the reason why it's called One Victoria. And here's a very brief video on this development. Guys, I do apologize if there was no sound on that. We've had like I said earlier on, there was a slight technical issue. Now, with this particular development, like as I mentioned, it's right in the heart of the city centre of Manchester, in a very prime location, walking distance from Selfridges, Harvey Nichols, Victoria train station, bars, coffee shops, restaurants, everything is walking distance away. 129 units in total. It's got 1, 2, and 3 bedroom apartments. It is completing in Q2 of 2025. So if this was of interest, we will start the mortgage process from this sort of thing very, very quickly and early to ensure that on completion, you could take a handover immediately on this. Rental yields are 5.79% gross, and starting prices for 1 bedrooms now are 288,000 because a lot of the cheaper 1 bedrooms have been sold over the last 9-12 months. 2 bedrooms and 3 bedroom options there as well. But it does sit in a very prime location. Now, because there weren't so many video images, I'm just going to show you one here of the location. It's literally 3 minutes walk to the Victoria Metro line, OA Arena, and then you're very close to the Piccadilly line, which is 12 minutes walk away. And you've got the Etihad campus, Old Trafford, Salford Quays, all very, very close by. So does sit, as you can see from the map there, very prime location. And some images of what the interior is going to look like. Again, with all of our developments, we only work with high quality developers and finishing to ensure that our clients do get a nice finish. And the kind of tenants we'd be expecting is executive and working professionals that would want to live in this, or maybe international students that can afford to live in the city center of these kind of locations. Okay. So just giving you a nice bit of an overview and giving you a high-end overview of this. £2,000 to reserve a unit. You can either pay 20% now, and then you pay the balance on completion in Q2 of 2025, mortgage or cash. That's option 1. And 70% loan to value or 75% loan to value mortgage options available. And the second option for a payment plan we have is £2,000 to reserve a unit now. You pay 15% now, and you can pay 5% on completion. And then the balance, again, mortgage or cash, 70-75% mortgage options available. So quite attractive in terms of the payment plans that we have available. To give you a decent idea of a 5-year return on investment on this, again, same principles. And by the way, guys, I know I'm whizzing through this. I do apologize, but I would go through this in a lot more detail with you in a one-to-one meeting. But again, just giving you a high-level overview of how the return on investment will work. You'd make 78,114, 113,984 over the next few years, over the next 5 years, which would then give you, in a summary, 115% return on your investment. Now, some of you may ask, why is this giving a lower return on investment over Berkeley Square? Well, it's mainly because the unit prices are a little bit more expensive now compared to what we did have on the cheaper units prior. But that would be the main reason why, but also the rent, but still a very attractive return. Same principle, but if you did it with cash, we'll just give you a quick, brief overview on this. You're going to make basically a 55.4% return on your investment. And a summary of it basically here, giving a brief explanation of how did we get to our 54.4%. But again, quite simply put, mortgage options are a lot more better than paying cash outright for a property in the UK. So happy to go through these in more detail with you later on. Now, just to give you a bit of a very quick last 2 slides, guys, overview. We don't just focus on those 2 developments and we don't just focus on Manchester. This is to give you an idea. We've got 5 options in Manchester total. 1 completed and 4 off plan. We've got 2 projects off plan in London, but also 2 completed. We've got 2 projects available in Birmingham. We've got 1 off plan available in Leeds. We've got Halifax off plan 2 options, and we have Nottingham 2 options as well. We have a total of around 16 projects available in the UK, and we do focus on all the major cities in the UK. Today, I was just outlining and highlighting why Manchester and why Manchester was one of the best investment opportunities there. Now, finally, guys, on the last slide, just showing you how does the process work when buying a property in the UK. Very simply, you will pay £2,000 to £5,000 to reserve a unit, depending on which development it is. After that, you will start the legal process with the lawyers in the UK over 28 days, which will typically cost you £1,500 plus or minus. And then after that, within 28 days, You will pay the 10%, 15%, 20% as your down payment to the lawyers directly. 6 months before completion, we will introduce you to Sophia, who will then go through the mortgage process on how to buy property or what options are available for mortgages in the UK. 3 months before completion, we will introduce you to the property management company in the UK. They will help to get the property tenanted, manage it, maintain it. So on completion, there'll be a tenant ready to move in. And then on balance is on completion, 70, 75% mortgage options, and also stamp duties paid only on completion of the development itself. So that gives you a good overview of how does it go and how does it work to buy a property in the UK. So guys, I would now like to open it up to any question and answers that we can assist you with. And Keith will now take over and ask the questions if anyone has any. Over to you,
Hi
Keith.
guys, thank you, Sophia, and thank you, Kieran. We've got some questions that people have submitted. So the first one I'll take, I'll try and give some insight on this, and then I'll invite Kieran and Sophia in to do that. Dubai purchase versus UK purchase. What are the pros and cons? This is a question that I get quite a lot, so I would set them out in this way. UK has finance that is buy-to-let, aimed at investors, interest only, that you've seen through the presentation, that can increase your ROI considerably. Sometimes it's double, 3 times, depending what it is, which is not available in Dubai. People will also mention tax. I think that's something you sit down, and I think Kieran showed some calculations. Yes, there's tax, but overall tax is a cost. And you just build the cost into the calculation based on leveraging, based on the investment type, and how much money you can make and what you end up with. And there are many tax strategies that you can employ in the UK, family incorporated companies that help you with inheritance tax and so on and so forth. I think UK has got a great track record in its capital appreciation over the years, and there is a mass shortage within the UK. I think they forecast 2.5 million shortage of properties. We've recently seen the immigration figures. Population's grown 1% in the last year. The UK planning laws are very archaic. It's very difficult to build, which is slightly different to Dubai in that there's a lot of desert and there's a lot of off-plan, a lot of developments that can be brought in there. It's more difficult within the UK to do it. So filling that demand is very difficult in there. That's kind of my view on that. I don't know if Kieran, you want to comment on that also, Sophia?
So I totally agree with what you're saying. And don't get me wrong, guys, I'm based in Dubai. I've been here for many, many years. I love Dubai, and I'll probably be here for the rest of my life as well. I'm here for a reason, because I do believe in Dubai, and we do Dubai real estate as well. However, when you look at stability, when you've got over 100 years track record, that says a lot about the UK track record, where property prices double in value. It's recession proof to a very large extent, which I showed you today as well. And not only that, I mean, quite simply, the UK is a very small island with a growing population. And with that growing population, there's not enough land. So that's about supply and demand. Now, Dubai could build for the next 100 years because they've got all the desert, all the land, everything available, and they can keep on building. But then it's a case of where's the supply and where's the demand, okay? Also, we all know that Dubai is not as regulated as the UK is, and where a lot of the money comes from into Dubai, but whereas UK, very heavily regulated. That shows stability as a market compared to where Dubai might be. And Dubai has got double-digit numbers. There's no doubt, and not a single doubt that Dubai's made a lot of money for a lot of people. But sometimes the question is, are we at peak in Dubai right now? Is it going to continue rising and continue giving you double-digit returns? Or are you looking at UK now being the better option? And also here, you have to have cash up front to do a lot of your funding of your properties, whereas the UK, you only need 20%, 30% down payment, and the balance, you can use very competitive interest rates to get mortgages. So that's just a very high-level overview. Sophia, I don't know if you have anything you'd like to add to that as well?
No, I think you really highlighted it all. It's that historic kind of growth that the UK offers, and it's that stability, and it's why it remains the main location. Like we said in the graph, we arrange financing across the globe, but the UK is where we arrange the majority of financing exactly for those same reasons, really.
Tax is always a question that comes into it quite a lot. We pay tax in the UK, we don't pay tax in Dubai. I think it's all relative. A great example, it might seem a bit off the wall. I walk into Waitrose in Dubai and I'll pay more for the same product than Waitrose in the UK. But the UK has 20% VAT and Dubai has 5% VAT. It's kind of irrelevant at the end of the day. It comes down to the net figure that you walk away with as being what that return on investment is. Another question that we've got, guys, is what does interest-only mortgage mean? Do I have to pay the principal later, and can this be paid off by selling the property? So maybe quickly, again, I'll pass this over to you, Sophia. Once my kind of comment on this, it's basically the capital has to be repaid generally when you sell it. You can pay it from savings, or you can refinance it to another mortgage. What I can tell you how people build a portfolio, maybe Sophia can comment on this, is as the property price increases, more investors do actually take money out via refinancing and take that money and create a deposit to buy another property and start building their portfolio along that way, which is how a lot of people do it and they need a really sensible approach to the loan to value on that and how they're making sure that they're still cash positive when it's done. I don't know if you want to comment on that, Sophia.
Yeah, no, you're absolutely right to keep spot on, really. I mean, so the three ways are correct. Typically, at the end of a mortgage term, you have to, of course, repay the lender back some way the interest-only mortgage that you've borrowed. Now, that can be done through either remortgaging, so that's when you negotiate new terms with a new lender, a more competitive product. You can then look at, of course, paying it off from savings or other assets you have in the background, or of course, sell the property. Like as we saw in the example, you hold on to the property. You then sell it 10, 15 years later. That property has, let's say, doubled. You can pay it off and then move your profit onto the next investment. But of course, when you do remortgage, at that point, you can also look at capital raising, take out the equity that's grown in that property and then reinvest it. Ultimately, with an interest-only mortgage, there's no need to ever repay back that loan in full. You can just keep refinancing every few years and keep leveraging and grow a portfolio.
Thank you.
I'll add one more quick thing to that as well, which is quite important. Even though, and Sophia, I'm sure you come across this, there's many clients that don't like the idea sometimes of the fact that you have 150,000 or 200,000 pounds outstanding. But the one beauty with the buy-to-let mortgage options is that those that do get bonuses on a yearly basis or anything like that, they can always overpay if they want to, and they can put lump sums. So that 150,000, maybe one of the years they want to put 10,000, 8,000, 15,000 or whatever it is, they can bring that down to zero if they wanted to as well. You're not stuck with 150,000 pounds borrowing forever. So some clients want to go down the interest-only option, and then as rents go up every single year, they will then also repay back and throw lump sums in whenever they want. And they can still end up with a zero balance on what they owe the bank at the end as well. So you are not totally restricted. But most people, rather than using that, they'll just save up the money and buy a second and third and fourth property rather than paying down that mortgage if they didn't want to as well. So it's very, very flexible. That's the beauty of UK mortgages.
Yeah, absolutely.
Okay, another question, quite interesting on this. So what do we think of the upcoming budget announcement? Will it have an effect on the market as a Middle East buyer on that? Erin, do you want to take that? Or, I mean, I've got to go on it, but happy for you.
So, look, the budgets have had a bit of an impact on the UK, no doubt. However, the one biggest thing that I think everything comes down to, supply and demand. The UK has a huge shortage of properties, but the population keeps on rising. As the population keeps rising, people still need a roof over their head. And if you need a roof over your head, you need to buy a property. Now, a lot of people in the UK can't afford that 10, 20, 30, 40% down payments to buy a property. Hence, the rental market in the UK has only continued rising in the UK. We've got the millennials and Gen Z nowadays, that don't want to commit to a 25, 30-year mortgage. They would rather rent, because today they're in Manchester. A year later, they'll get offered a job in Birmingham or Nottingham or Liverpool or Leeds. people aren't stagnant in the UK and people like to move around. By being stuck and committed to a 25-year mortgage in one particular location makes it difficult for them to be able to move around and do that. And this new generation, they're more interested in renting, giving them the freedom to do whatever they want. But probably the biggest thing is that most people, it takes them a long time. I had some statistics recently that showed the average age somebody buys their first property in the UK is 38 years old. So from university up until the age of 38, they like to rent, and they will rent. To also reflect, it's not going to affect the Middle Eastern buyers or African buyers or all the countries that we deal with around the world, because they're still getting high rental yield and high income from their investment. The most important thing is you buy a property in the UK, it will be rented out, and the rental income will always cover your costs and your expenses on a monthly basis.
I mean, to add to that, they're talking about increasing maybe some of the stamp duty and other elements of it, and also add as well that there are some changes in the process in terms of the way that properties are managed and how tenants can be dealt with. But that's still, even going back to the Dubai question, one of the other things is it's far more landlord friendly within the UK than it is in Dubai in terms of getting the property back. If the tenant doesn't pay, for example, and things like that, the referencing that's done in the UK is full credit history, employment checks, affordability checks, to making sure that they can afford to pay the rent. And noticeably, the referencing companies do actually offer a rent and legal guarantee. So effectively, if the tenant isn't going to pay the rent or loses the job, for example, then effectively the insurance company comes in, they cover the rent, and then they cover the legal costs and process to evict the tenant. And it's a lot easier in terms of getting the property back in terms of that as well. So I think there is some news around we're going to change some of the renting laws, but I think they're still quite landlord friendly in there. And Kieran's right as well, when you look at some of the things that go on with the industry, within, the economics of it all, when times come hard, like the financial crisis we had, renting went through the roof. So people who actually had properties, the renting went through the roof because it was an option for people, and the rental demand was high, and the rentals increased at that point. And still now, I think we've talked about this before. Currently, the UK has 2.5 million shortage of properties that's needed over the next 10 years to support the population growth that's going on right now. And if anybody's interested, there's a recent interview with Boris Johnson talking about immigration before and after Brexit. Immigration went up after Brexit 2 or 3 times more. So, the population grew 1% in the last year. So the demand is always growing. And that's why it makes such an interesting proposition for UK investors. Moving on to the next question, if anyone can look at that. What are the taxes payable on rental income from property in the UK for non-residents? My quick answer on that is it's exactly the same as being a UK resident. There's no difference in terms of how it comes from the rental income. But if you're using a finance or mortgage, you're much better to look at a corporate structure to own the property, because effectively it offers some advantages. And again, you need to take real advice based on your own situation in terms of what your investment strategy is. Corporate structure, you effectively the company buys the property, and effectively then the mortgage, if you're using a mortgage, you can offset the mortgage charges to that, either the fee and the interest, or you pay net. Corporation taxes depends. At the moment, they're looking at that, and you pay capital appreciation. But when you come to sell the property, for example, you sell the shares, you don't sell the property. Gives you a bit of an advantage because you kind of avoid stamp duty for the buyer, makes it all a little bit better for them. But again, usually I would say as a rough guide, you're probably going to be somewhere around about 20%. Is that right, Aaron? Would you say? In terms of rental income, and then there's capital gains tax, which is roughly the same on that. And again, if you've got inheritance tax, you can negate that by using family incorporated structures as well.
True. And don't forget, with UK property as well, you get a tax allowance, income tax allowance. So the first £12,750 at the moment, give or take, that you earn on rental income, you don't pay tax on. So year one, you earn £12,000 rental income, you don't pay tax. Year two, rent's gone up to 13,000, you only pay 20% of £250. So it's actually next to nothing. So you do get that tax allowance in the UK for the first rental income that you're earning as well. That's a great benefit.
Next question. If you want to add anything to that last one, Sophia, okay?
No, I think that's fine. I mean, there are those non-resident landlord forms that you can complete as well, which just declare that you are a non-UK landlord for tax reasons. So that's always worth just doing, and that's free to do. But yeah, that's always worth doing as well, just so you get that allowance. Yeah.
Another question here is how much is property management fee and are the units ready to be rented? Yes, the units when they come to complete in a camp, they're ready, snagging, and if you're going to rent it, there's quite and Hiran can comment on this. There are companies that provide furniture packs that are very cost effective and effectively they deliver it. They configure everything, they set everything up depending on it's 1 bedroom, 2 bedroom, and they have the different levels of the quality of that, you know, from basically from platinum, gold, bronze, depend on the unit that you've got that you want to rent out on that as well. So yes, the property management fee can vary from there. What would you say is a fee for Manchester here, and for example, in the examples that you've used?
Typically at the moment, anywhere between 8 and 10%. Typically, London is up to 15%, but typically around the Manchester area and don't forget, because of the reputable developers that we work with, a lot of the developers have their own property management team that look after all the units and all of the communal areas as well. And because the property management side is not their profit arm, they do offer very competitive 8% for the rental year, 8% for the property management fees on a monthly basis. So that would be about typically right.
Okay, anything, Sophia, again, if you want to compliment or add anything to that?
I think, yeah, that's fine. Yeah. I think I would say the same. I think 8 to 10% is where I typically see on cash flows. Yeah, the budget for that.
Okay, so we've got thanks. We've got a number of questions from Shahir. So I'll kind of go through that in terms of trying to understand the question on this. So due to the high inflation and local currency devaluation that is leading to economic crisis, because in the UK it's huge amount of demand and supply.
Yeah.
Do you any comment on that, Hiran, in terms of? I'm not 100% sure in terms of the question.
I think I understand the question because I had this from a lot of my Africa clients where you've got a heavy devaluation of currency at the moment. And the problem is with the devaluation of currency, what would have cost them, for example, X amount 5 years ago, today is costing them triple because the currency is devalued a lot. And with that, they're still buying the property in the UK, but it's costing them more from certain countries like Africa and a few other places. Unfortunately, if I'm not mistaken, the way the question's been asked, there's not much anyone can do about it. But what you can do is safeguard yourself by jumping into the UK property now, because the pound is actually a very strong currency. It is one of the strongest in the world. You've got the pound, the dollar, the euro, and the yen. They're the 4 major currencies around the world. When you're invested into them, then you're always going to have a strong currency. So that's going to be the best way of doing it. Now, sadly, it's about taking the hit. But if the country that you live in and you've got continual devaluation of currency, it's only likely to continue getting worse. I've got a lot of clients in West Africa and other places like that sadly, they've literally seen their currency triple compared to the pound. So what they could have bought, they're now paying 3 times the amount in just 1 year alone. But sometimes you just got to jump and take that hit because in the long term, you still benefit. Because remember, when you then convert back from pounds to your local currency, you'll make even more money back because you'll be able to buy more for your local currency that you're in. I hope I managed to answer that. Not too sure.
I think so. And Shahir has actually added some information for everybody that I think you can see on there in terms of the tax and the stuff that we spoke about, which is great. And thank you for that, more in line of the kind of things that we said in terms of the detail. I think we have, I think there was another question that we have. Typical timeline for completing a property purchase in the UK? I think have we covered that?
It varies. So to give you an idea, if it's off plan, then first 28 days you do the exchange of contracts, and if you've got a second payment, again within 28 days you complete that. If you're buying ready complete, if it's a mortgage, then as Sophia mentioned, typically you're looking at about what, Sophia, 3 to 4 months, give or take from start to
Yeah.
finish now at the moment, because there's a big
Yeah.
backlog at the moment with lenders, I presume. So it's taking a bit longer to complete. But this is why most people will just buy off plan, and then you've got plenty of time, spread your payments over a period of time. And then you can start your mortgage process 6 months before completion to ensure that you've got it done in as quick a time frame as possible.
Yeah, absolutely. Yeah, started around 6 months prior to completion. I would say just make sure that everything's ready. And as Helen said, it's an off-plan property, so you're not starting it now. But and the beauty of that is you're not locking in an interest rate today, but in a year's time, maybe a year and a half's time, and where interest rates are predicted to be lower as well and move in line with predictions.
I think even the governor of Bank of England is now saying they're doing more aggressive rate cuts that are coming along and everything. So I think we're looking now that we've got through all of those questions. I don't think there's any more that we have. I think we've answered all the questions on there. So I think at that point, I think I would take this opportunity to thank Kieran, to thank Sophia for your time and your input into this. And I hope that we've managed to sort of give people some idea around why people do invest in UK property. You guys you've seen, I think Kieran's put contact details, Sophia has. You can come through. I think I put in the chat, you've got my WhatsApp number, my email address. Go to our website. If there's anything on there you want to do, you can book a meeting. You can just come to us for a conversation if you want some more advice. We're really quite happy to do that. We work with a number of developers around the kind of approach that our job at Magnate Assets is to try and put forward an education program so people can understand more about UK property investment and why people do invest both in the UK and overseas, and the billions of pounds that are invested in the UK. There's nothing to stop anybody from overseas investing in the UK. There's no reason that overseas investors can't get a mortgage in that respect, in terms of, their buy-to-let mortgage is based around the proposition and the deal that's on the table in terms of rental income and what the property is. So there's a lot of opportunity there. Any final comments, Sophia? Kieran?
No. I would just love to welcome a one-to-one meeting with everyone that's attended today. And at least you can learn a lot more. Today, we just did a high-level overview, but I would love to cover your exact needs and requirements in more detail as and when it's suitable for you. So thank you very much for attending today, everyone.
Super.
Thank you, everyone. And thank you to Chirag, my guy at the background, to handle all the technical stuff there. So thank you, everyone. Just check, we've got no more. Okay, we've just got one final question. Bill, I'll just come in. So what are the average net yields in London compared to Manchester?
Manchester's almost double. Typically at the moment in London, you're looking at about 3.5%. Manchester, and bearing in mind most of the properties in Manchester are half the price of what London is, and the rent doesn't mean that it's double as well. But in Manchester, typically you're looking at about 6%, 7%, depending on how far off plan you're buying as well, because rents go up every year. So does the property value, but you're securing a property price at today's price. So it's almost double London, Manchester is.
And I would also add on there as well, rental yields can be, some of the cities out there can be more if people are looking at short-term lets, which is basically Airbnb and holiday lets. There are some areas that are quite in demand at the moment. And again, if anyone's got any kind of question on that, there are different areas. So you can get like sometimes up to 12 or 13%. But you need to really make sure buildings need to have the right authority, planning permissions for that. And you've just got to really make sure you get the right kind of development in the right area. Because there are a lot of people who do talk about it, but sometimes buildings are not really in the right area for the short-term lets. Need to be like city centre, right permissions, etc. So they can be even higher, particularly in the north as well.
Agreed. Absolutely agree.
Okay, if you want to visit, you can visit our website, magnateassets.com. Please feel free to reach out. I think we put the information in there. I'm quite happy to connect. If you want to catch up with Sophia or Hiren, quite happy to put you in touch. And if you've got any questions, let me know. Go to the website on that. Again, so thank you guys. Have a great evening and thank you for your time, everybody.
Thank you, everyone.
And look forward to speaking to people in the future. Thank you very much.
Thank you.
Thank you, everyone. Take care.
Bye.
Bye.